Hi guys, Simpson here. On this episode, I interview Joel Labonte and Chad Walmsley. Joel is the founder of Dwellscape Investments based in Alberta, and Chad is a contractor and runs the Wallen Property Group based in BC. These gentlemen together have invested in tens of millions of dollars of real estate and have partnered to acquire multifamily deals in various parts of Canada. We discuss partnerships, all things multifamily real estate, and value add projects in commercial real estate. And to find out more about what we are doing at Focus Capital and sign up for our newsletter and get access to our free investing guides, I encourage you to visit focuscapital.ca. And with that, I hope you enjoy the show. So gentlemen, welcome to the show.
Thanks for having me.
Thanks for having us. Yeah.
Okay, so as I mentioned, there's a couple topics that we wanted to get into, such as partnerships and multifamily real estate. But first off, I just want to say, Chad and Joel are two gentlemen that I've had the pleasure of getting to know over the past few years. We've done a lot of deal reviews together, some mastermind groups, and had the opportunity to just chat a lot about real estate in general, the market specifically here in Canada, and commercial real estate overall. So I'm looking forward to the discussion today. And we'll get into all those topics that I mentioned. But I think what I'd really like to kind of kick things off with, gentlemen, is really just getting an understanding of how you two got into real estate investing in the first place. What was sort of that thing that prompted you to take that step to get into real estate as an investing asset class? And maybe a little bit of backstory about how you progress from there. So Joel, maybe we'll start with you and just talking a little bit about your real estate background and how you got into it.
Yeah, thanks, Steve. Well, the background, my lengthy bio said, I started as a flooring contractor here in Alberta, and we were doing some a renovation for a contractor, and the contractor, when we asked, he said the owner was actually a real estate investor, and I was like, what is a real estate investor? And so the next day I met him and we had a good conversation. He was telling me, well, this is a flip we're doing, and we're doing rentals, we're buying house, putting suite in the basement, and we're splitting profit with investors. And that really piqued my curiosity, and so I investigated and did some courses, read some book and podcasts, and eventually started in 2012 in the small residential. And that's kind of what triggered the real estate investment journey. And in 2020 or 2019, decided to take a different direction toward the multifamily, where again, did a specific course toward that and learned about the asset, and eventually started Dwellscape Investment and moved into multifamily.
Excellent. Okay.
Yeah.
And Chad, what about you?
Yeah, thanks, Stephen. My kind of start or foray into real estate started in 2001. It's called a Vancouver Special with my mom. She was the money partner and I was the working partner, and I was an apprentice carpenter at the time. And I lived in the years with a couple buddies, and we had a basement suite, and that was kind of the beginning. I mean, my father was a realtor for 40 years and held a bunch of real estate in the early 80s. And obviously everyone knows the story of the interest rates going up. And between him and my mom at that time, they had about 16 properties, and, it went critically. So I won from 2001 and sat on that prop for quite a while, and then got into industrial in 2013 for a need for my construction business to be housed and kind of grow. So got into that with my partner at the time, and later we, with a few other partners, bought a mobile home RV park, and got into more multifamily with Joel, and got Wallen Property Group off the ground in 2021. So.
Nice. So you both have had, I guess, different kind of forays into real estate and your own sort of history with different asset classes, and Chad specifically, it's getting into RV parks and things like that is a very niche sort of thing to do. So that's pretty unique into itself. But what I wanted to talk about, I guess, stemming from that was how did you guys start working together to sort of form a partnership, and when did it become apparent that maybe partnering up to do bigger deals was something of interest to you guys?
Yeah, Chad, go ahead. You want to go ahead, Chad?
Yeah,
Or
yeah, sure. I'll jump ahead. So Joelle and I actually met, as you mentioned earlier, Stephen, through that group that we were getting together, and found he and a bigger opportunity for him and a bit more of a capital raise, and through us chatting in that group, and I said, and he's like, it's a bit of a bigger deal, and I think I'm gonna need some help on the capital raising side, and I said, well, flip me over the deal. Let me take a look at it, see if it's something I'm interested in. And, I've known you now for a while through the group, and partnering with you on it if that's if you're interested in. And he said, yeah, of course. And so we just had, multiple conversations, and Joel's a pretty easy guy to chat with and work with. And we figured out how we were going to form the partnership with both our entities, becoming a partnership, and raising capital was a big on my side through my connections in around Vancouver. And Joel had found the opportunity, was closer to the asset, so he would manage the more kind of day to day with our property manager, and that's kind of where it took off for the both of us.
Mm-hmm. And Joelle, what was your experience with that, with just getting that initial partnership going?
yeah, I think like Chad said, the big thing was being on that mastermind for over a year and being able to see how the other underwrites, because we looked at a lot of deals and what's their idea, their values through like the investing. So it's a bit of a gut feeling as well. Like we saw, okay, well, there is a connection, we get along, and yeah, I had the deal, he had the connection for the money. It was a partnership that really made sense. Although it happened nice and easy, all the back end is important too. It's not just on a napkin either. So
Mm-hmm.
we need to have the proper documents to protect each other and protect everybody. Like in case something happens, we all have those horror story of partnerships that we hear from others. But yeah, so far I think it's been great, and we're looking forward to growth as well, our business together.
That's awesome. Yeah. So I think the other thing in the mix too is that you not only are remote partners, but you've also got remote properties, right? Can you talk a little bit about how you came up with or maybe just talk about the niche that you're into, and then also how that sort of worked with this newly formed partnership? Did that pose some specific challenges, or was it sort of, hey, we're remote anyway, so we can manage remote properties? Neither of us is close by, and maybe just talk a little bit about that.
Joel, you want to?
Okay, yeah, yeah. So going for property remotely, it's always a little bit. Uh, I mean, it's perceived as a little bit more riskier, but it's also a little bit more challenging, I guess. So it's quite important to create a team around uh, around those property, and to be able to manage, because and to be your eyes and ears on the property. So it's all about, I think, team building. And for now, how we approach it between our partnership is whoever this that kind of imaginary line in between, like in the middle of BC, basically, where here it's closer to Chad, and maybe Chad at this point will take care more of the asset management and more like dealing with the manager. And on this side, well, it's maybe more Joel that's doing this. And so that's the kind of approach we've been doing. Although some property may be like further than a quick day trip, but team building, I believe, like, is very important. The property manager, the in-house manager, and have all the trades to take care of your building. That is, I think, what's is important when investing remotely. Yeah.
Mm-hmm.
And just to add on Joel's point, it's when Joel talks about your whole team, on the on-site stuff, it's really important to have a great property manager and caretaker, like you mentioned. But stages and putting everything together, it's critical to have a good lawyer familiar with either syndications or joint ventures or that type of estate. It's also you need a great accountant, another couple people that you really need to have on your team, and then relationships with brokers as well is pretty helpful. But in terms of for being remote with the asset, with me and having my construction background, I actually I've flown out a few times now to that asset before we acquired it, and looked into some of the bigger things that might be required, or things that could really hurt you on an investment, right? You're not going to just it'll you when the seller says that they've redone the roof, and okay, well, you've redone the roof. For me, it's who was the contractor that did the work? Was it your cousin that did the work, or was it a licensed contractor? Were they insured? Did they compensation? Like, were they a legitimate contractor? So we get up on the roof and have a look at those things. Age of the boiler, that type of thing. Those are some big things that can cost you out if you don't check those things out, or you're not there doing the inspection and walkthrough as part of your due diligence. So even though now for the most part the team's in place and it's running in remote, there still is that on site. You need to see it and have a look, especially when you're working with big numbers. So
hmm Yeah, that due diligence phase is super critical, obviously, and usually on the commercial side you've got a bit more time to do it, but obviously there's a lot more moving parts, so you really need to take that time to do a comprehensive job. So yeah. Maybe talk a little bit about so both of you guys obviously have a background in contracting, in the trades. Maybe talk a bit about how that has helped you with respect to getting into real estate, getting into some of these bigger commercial deals, these multifamily deals, and what are the things that your background in that sort of the trades and construction side has kind of given you as you're going into these real estate deals? And maybe Joelle, we'll start with you.
Yeah, I think it's been very helpful. I think one of the big drawback or things that an investor would see as an hurdle to move into buying a bigger building is the physical aspect of the building. Like there's so many units there's a boiler, and there's all those aspects. And being in construction and seeing so many, and seeing how pretty much all finishing and everything how it's done, it's definitely not something that is intimidating when we look at a property. And now we can look at 10 unit or 100 unit. It's pretty much all the same, just little box stack on top of each other. Like it's
Yeah.
so it's not so it gives us a little bit of an advantage in terms of mindset to move forward, I believe. And in terms of being pricing it or seeing opportunity as well, we specifically go after value adds apartment buildings where we can increase the value through meaningful renovation and increase rent or increase income and such. So being able to look at a place and right away seeing what we can do, how much it will cost, is definitely an advantage as well.
Yeah. Yeah, it sort of gives you a little bit of inside track on especially when you're dealing with some of the, I guess, infrastructure pieces of the asset, when you're dealing with, any renovation work that needs to be done. It kind of gives you a leg up on not only the understanding of it, but also being able to check costs and pricing and things like that.
yeah,
That's right.
absolutely, Stephen. Having that confidence and knowing that, okay, well, you got X amount of units in this building, and if you're going to turn them over, and this is the scope of work that you're going to do, and having that confidence and comfort knowing that you're good on your numbers, and having that experience in construction is big. And I cut my teeth on which I'm sure a lot of people have heard about in and around Vancouver.
Right.
So I did that for a number of years. And so when I look at these types of properties, I'm always mindful of, does the building have overhangs? What are the conditions of the decks and balconies and the windows? Because those are, in a 50 plus unit building, windows and door sliders and decks and railings can add up to some big numbers if to re that type of stuff. So and we recently replaced a bunch of the windows on two of our buildings, the townhouses, all the windows and sliders, and that's it was a six-figure ticket to do work, right? And so having my connections in the industry with suppliers and trades and contractors, as well as Joel's contact, definitely gives us a leg up, or an advantage, and for us, that comfort of knowing that we're good on our numbers when we're factoring that into, if we're going to pursue an asset. So
Different asset classes, in commercial real estate. So everything from multifamily to office to industrial, which is what I focus on, obviously a bit more. And what was sort of the background that led you guys to focus on your multifamily asset class, and specifically, what you guys are doing with the value add projects? Maybe talk a bit about, the background on what sort of led you to come up with that thesis. Was it just sort of a natural progression, or was it something that you saw in the market, and then how you sort of narrowed in on that? Really would be interesting to hear the sort of the background story on that.
Yeah, definitely.
Joel, go ahead. Yeah.
Yeah, so with my background, I guess in flooring, I always been inside a unit. I always been working on the inside of the house. So for me, the long-term rental, is definitely a natural progression, and that's what was appealing to me in multifamily. It was some kind of familiar for us. In terms of multifamily, the economy of scale, in terms of when you want to build a business as an investor, seem much easier than actually buying 100 home, while you can buy a building that has 100 units. Much easier. You have that economy of scale where, well, you can have 1, 2, or 3 units empty, but yet you're not in the red. You're still cash flowing. The property still produce. So that was very appealing to me. And also, it's very appealing to our investors. They want to make sure that wherever they're putting the money, like we're not, they don't want to call and say, hey, we need 20 more thousand to cover this month. Like, they don't want to see that. So the economy of scale that multifamily can get is a very big thing. And so that's one of the reason I think I went toward multifamily. Yeah.
Mm-hmm. And Chad, what about you? What sort of push you in that direction?
yeah, similar to what Joel mentioned, it kind of just generally what pushed me into commercial was, in my early days, I thought, as a carpenter, I'm like, okay, great. My retirement plan might be, I got 10 single family homes, and, after mortgage and expenses, if I'm netting $1,000 and I got 10, that's $10,000. Well, hey, that's a pretty decent retirement. But the challenge is that you're trading one job. If you're working as a carpenter, for me, I'm trading one job as another job for a property, to be a property manager, because it doesn't necessarily make sense to have a property manager for all those 10 properties. You're going to do it yourself, to take out of it, and then you're 10 different roofs and 10 different boilers, and it's more headache. When you can scale up to a multi-family, you're going to have a caretaker on site, depending on how many units, and a manager, and they're fielding and dealing with those calls. And then you become the asset manager, and you deal more with, investor relations and whatnot for that. So that was kind of my, progression to that. The other side is, in a single family, if you've got an upstairs and a downstairs, you lose a tenant, you're now down, 50% vacancy on that property. You can afford to lose a few tenants on a 50 plus building, or and still have, a lot of in and you're covering more than all your costs, it's not going to hurt you really. So that's for me the benefit of the multifamily side of things. So
Mm-hmm. Okay, and so maybe talk a bit about your specific niche with sort of value add. Are there certain things that you're looking for? Obviously, you want to, I guess, get assets lined up where you feel like there's an opportunity to add value. But maybe talk a little bit about your strategy, and are there certain markets that make this work more than others? Are there certain types of assets that sort of allow for this strategy to be executed? And maybe just kind of fill in a bit of the blanks there on your specific strategy with the value add.
yeah, sure. So for the value add, we're typically looking at older buildings, be from the 80s or 70s, just dated buildings that need upgrades to the units that move or leave. We can add that value. It's maybe got old carpets, and we're going to put vinyl plank floors in, for instance, that are going to be durable, last long. Clean it up, might add cabinets, some lighting, clean the unit up, and increase the rent substantially. The great thing about the value add side and bumping the rent, because in the commercial real estate industry, most people know that the asset's valued on what's the income that it produces. So you're pushing that income, you're pushing the value of the building, and so that's really the name of the game. And that's the kind that we're interested in. We're primarily looking in secondary and tertiary markets because the land values are so high in and around where I am in Vancouver. There's not opportunities around here, but we really find that our bread is in these secondary and tertiary markets that we're looking around all around BC and Alberta.
Mm-hmm. Yeah, and I can agree with that because it's we see the same thing in Ontario here. It's the GTA is just so far out of whack with respect to the land value that really to get any type of leverage and any type of value in really any real estate asset class, you've got to be looking outside of the GTA in those secondary and tertiary markets.
Yeah, and it can be a lot harder to it's easier for us, we find, to find those cash flowing assets in those markets as opposed to in the core markets or the primary markets that tougher, and groups too that you're going up against that got much more horsepower and capital behind them, so and their outlooks far longer. So I find also for us there's just less competition in the areas that we're looking to.
Okay, interesting. Okay. Um, I guess I wanted to talk a little bit about, again, this sort of active versus passive investing that takes place. So maybe talk a little bit about that transition from passive to active real estate. And, I'd be interested to hear sort of, the things that you're seeing. Obviously, you guys have got investors on board, you've got partners in your deals. What are some of the advantages of having a passive investment and investing in deals like the ones that you guys are offering? And what are some of the benefits of those types of investments for those passive investors? And really, how could they leverage your expertise as partners in these deals?
Yeah, absolutely. The our business model is basically go get a property and bring it to our investor group so they can actually invest passively in it. So that's why a reason why we like the value add strategy. It can provide a little bit better return for the investor, for everybody in the deal, for all our partners. And so our approach is we're finding the opportunity through our network that we have created of broker and through basically both province. And then we're doing the due diligence. We're removing all the insecurity around the deal, all the risk. And then once it's all nice and cooked, before purchasing it, we're bringing the investors, and we're bringing basically a product that says that we feel confident we can actually give projection in terms of what it should return with our expertise and experience. And so for us, it's definitely not passive. There's definitely a lot of work going into those properties and also managing them afterwards. The nature of value added means that there's a lot of work even after purchasing it to be done. It's not just collecting rent every month. We have unit renovation going on a month to month basis, and we have capex to do. And our job is really to keep on the business plan, what we have projected, and try to knock it out of the park as well, right? And so, but for the investors, they receive basically an all cooked deal and an idea with a business plan, and that's what we're trying to do with this property, and that's what we think with our expertise that we should be able to attain as a return. Now we're not, nobody have a crystal ball, and it's nothing guarantee. It is, there's risk in invest in any kind of investing, but then the investor decide, well, yes, I'm okay with this, and I want to invest their money, and basically their work stops there. They have the documents to sign in terms of the agreements between the general partner and the limited partner, and then after that it's fully passive for them.
Mm-hmm.
This is how the passive, we're definitely active and the investor is definitely passive. Yeah.
Mm-hmm. Nice. And so, Chad, what are you sort of hearing from your investors in terms of, some of the benefits that they're getting out of these passive investments?
Yeah, Stephen. I think it's no secret over the last few years in the pandemic, and the public markets have not been great, and obviously there's a lot of people that have money in there, and so when we find one of these opportunities, it can take 10, 12, 15, or even 20 deals that we'll work through and go look and underwrite before we kind of put together a pitch deck, and it's something substantial enough where we're ready to, once we put a pitch deck together, already underwrote the deal, we're happy with it, and now we're going out to investors. So that's kind of one thing just to mention, where it's not just every deal we come across that we're putting a pitch deck together and sending it out, but when we send that out to investors, we let them know that we work quite hard to kind of underwrite it. We put a lot of time in, and we stand behind it. We put our own capital into the deals as well. So that's one of the things for the investors, kind of confident, or knowing that we're personally invested in the deal. We've got family money in the deal, but the returns that we're providing as well. On our last deal, we were we were offering a 9% pref return. So that's pretty for a lot of the investors that were in the deal with us. They like to see that kind of that reoccurring quarterly revenue coming in on that, and communication style that we have, sending out quarterly newsletters, keeping them updated. Just, hey, we just did this unit, here's the rent that we were getting before, here's the cost of the renovation, here's the rent we're getting now, and this is where we've come from, where we started to where we are, and how much we've pushed the net operating income. And so we've gotten a lot of good feedback from our investors on how we commute and keeping them up to date, and that provides them a surety and confidence in us as the general part. So
yeah, absolutely. Yeah, and I think I think we're all sort of getting the same feedback. Once investors are able to get access to these bigger types of assets and get in on deals that they wouldn't otherwise have access to just because of the scale of them, it's a pretty amazing thing for someone, for example, who's just only ever been able to buy stocks and bonds and things that are traded on the public markets, to get access to these types of private equity investments. It's really a powerful thing. And so all the feedback that I've gotten has been extremely positive, and it sounds like you guys have too. And I think once our investor partners realize like, hey, I have access to something that's pretty scarce. It's really, really quite a, a beneficial thing for them. And their kind of eyes open up to the possibilities of investing in these types of assets. So yeah, so it's a pretty powerful thing, and it sounds like you guys have had similar feedback to what I've gotten for sure.
Beds and sheds.
Yeah, if I can add,
What's that?
yeah,
Beds and sheds.
Beds and sheds. Yeah, those are the two recession resistant commercial asset classes for
You
sure.
need a place
Beds
to
and
sleep
sheds,
and
yeah.
lay your head and a roof over your head, and businesses need a place to operate out of. I mean, it's not going to change for the foreseeable future, right? So
Yeah, yeah, and especially in markets where we have like a lot of those markets here in Canada where to build anything is so not only cost prohibitive, but there's just so much red tape involved, right? So if you have buildings, if you have assets that, are ready to lease out, that are basically producing income day one, I mean, those are so beneficial because, like I just said, being able to build new stock is really cost prohibitive and time prohibitive as well.
absolutely, and in our decks too. One of our previous deals, where our acquisition cost was below replacement cost of that asset. So that's a
Yeah,
that's a big advantage for our group and our investors. So
yeah, for
mhm,
sure. Yeah.
yeah.
Okay, interesting. Okay, so as we're kind of wrapping up here, I thought I'd just ask you guys about, maybe some tips or lessons learned or anything else you wanted to sort of share with respect to someone who's looking at potentially investing in commercial real estate or maybe specifically into multifamily. What are some of the things that they can look out for? How can they sort of educate themselves and sort of, what are the things that maybe you wanted to pass on to someone who's considering investing in this type of asset? Joel,
Yeah,
maybe we'll start with you.
there's definitely a lot to it, and it can be kind of doubting to get into the buying an asset like this. I think everybody can do it, but I don't think everybody does it right. So first of all, like I think education in terms of how what's the dynamic in that asset class that for us multifamily, like how is it valued, what is a good deal, and the underwriting is definitely important. So education first. I mean, it's out there. There's so many book around it, class and mastermind and all this around the country. There's so many. The next thing I think is building your team. It's not a single sport. You definitely need a team. You need to, in order to get deal flow, like to see a lot of apartment buildings, let per se, you need to talk to a lot of of brokers. I mean, sorry, real estate broker. And then one of the big thing is debt as well. Well, you need to have connection with the debt brokers as well, mortgage brokers or bank. Those are really important as well. You got the legal and tax side as well. So that's a big team that you need to support you to in order to buy this, because every aspect is important of this as well. And for us, I believe we could have kept going on by ourselves and keep growing. But if you want to grow fast, it's not a single sport either. You need partnership, right? Like money, like finding the money to buy more asset is always one of the big challenge, I think, for every syndication business or investment business. And so when you partner with others, you definitely lift much faster. So I think those are some of the steps: building a team, education, and partnership. If you want to grow fast, I think, or bigger in a way, this is definitely important.
Yeah, no, for sure. Sounds good. Chad, what do you think?
yeah, just exactly what Joel said. It's a team sport, and it's going to take you a long time to kind of do it yourself. There's a lot of material out there. I spend a lot of time listening to podcasts, which is how I ran into both you guys. Just through listening through podcasts. I've done a lot of reading and networking. Networking is huge. Getting out there, like Joel said, making those introductions with brokers, having those conversations, and as you start to put deals under your belt too, we'll start to come to you with more deals. But just be mindful and respectful of their time, because for them it's about deal certainty, and a lot of time can go into a deal, and get paid until the deal gets done. So just make sure that you're being mindful and respectful of that. And yeah, same thing. Mortgage brokers, get a great guy to help you out with the guy or girl to help you out with the debt, and as well legal accounting advice and education. For me, it's the journey, not the destination. So spend a lot of time underwriting and looking at deals, and eventually it'll come together for you. So
Yeah, awesome. Yeah, I think the education piece is huge, right? I think it's really the backbone of a lot of what we're doing. Not only, education in your specific, niche area or strategy or whatever it may be, but also, I think just generally on the personal development side, right? Just making sure you've got the right mindset, making sure that, you're taking care of your mental health, your physically, things like that, and just making sure that you're ready to sort of, get in the game, so to speak. So I think all of that combined is really all sort of, winning package that people can put together.
yeah, absolutely.
I wanted to ask you guys, I'm not going to ask you guys to make predictions, but, just wanted to get your sense of, what you see coming down the pipe. Maybe what are your thoughts on, where you guys go next with your partnership, and what are some of the things that you've got planned maybe for the coming year? Be interested to hear sort of what's on tap, and what your thoughts are for 2024.
Yeah, absolutely. We're obviously pushing hard for a lot of doors. I think for us, we want to push over at an additional 100 doors this year to the portfolio. That's going to depend on certain deals, but we're pushing hard towards more deals in the portfolio, and expanding to larger size deals as well, and growing the general partnership, and adding more adding more investors on a weekly basis to our database. And so having those conversations, and basically being ready to go when a deal comes along. Interest rates play a big factor in underwriting deals, and nobody has the crystal ball when it comes to that. There's a lot of discussion that we're going to see, anywhere from a half to full point drop, and when that's going to happen, nobody knows. But that can make a substantial difference in some of the sides of these deals that we're underwriting. So it's a wait and see to where it's a bit standoffish between buyers and sellers, maybe a little bit right now, and everybody's still kind of waiting. There's still deals that are being done, and we're still actively working hard and finding opportunities for our investors, and that's the name of the game for us, is bringing value to them and putting them ahead of us, and putting our investors first. But it's looking pretty promising, I think, over the next year here. We're looking for opportunities. So
Awesome. Yeah. No, I agree with you. I agree with you, Chad. I think there's some light at the end of the tunnel here. So I think I'm optimistic as well for 2024. So
That's right. Grow is definitely the name of the game, like you said, for this year. Although it could be growing our team, we're growing our. It could be also growing our group of investors that we're always actively trying to grow the size of the deal and grow the portfolio. Like, I think growth really, I think it's the name, and it's a good opportunity, I think, right now as well. We with what's coming with the interest rate going down, I think there's going to be much more activities in the market by the end of the year to next year. So I think right now if you can find something that pencil out, it's a very good time to be in the market.
yeah, I would agree. Yeah, like I said, I'm optimistic. I think there's a lot of pent up demand, and I think, there's sellers out there that haven't sold, and there's buyers that need properties and need to keep money moving and capital allocated. So I think there's going to be a healthy market this year. So, okay, well, great. This has been a good conversation, guys. I guess maybe just to sort of, wrap up, I wanted to ask you guys where people can find out more about you and some of the stuff that you're doing. Where's sort of the best place for them to get more info?
Yeah, you can find me on LinkedIn, Chad Walmsley. You can find me at Walland Property, Walland_property_group on Instagram. And those are the two main things. Reach out, and always happy to have a conversation.
Yeah, and for me, it's Dwellscape.ca. It's the website. One of the easiest way to learn more about what we're doing and reach out. Same thing, LinkedIn is Joël Labonte, and Facebook as well. We're pretty much all over the place, yeah. So just look us up, yeah.
Perfect. Yeah, and I'll make sure to put all those links in the show notes as well, so people can have it there as well. Okay. Well, thanks a lot, gentlemen. Great conversation, and we'll see you on the next one.
Sounds good. Thanks, Stephen. Appreciate it.
Thanks.
So, hope you got some value out of this podcast episode. I invite you to like and subscribe to the podcast, leave a review, leave a comment. Let us know what you think. And for any other information about us, what we're doing, and the types of investments we're into, please visit focuscapital.ca, and on there you can find a ton of information, additional podcasts, and a lot of free resources. So that's it for this podcast episode. Bye for now.